Today we're diving into Polkadot, a project that's been quietly rewriting its own story while the rest of the market rides waves of fear and excitement. It's late September 2025, and as I record this, Polkadot's DOT token is trading around $3.80 to $3.90, giving it a market cap a little over $6 billion. That's a long way down from its all-time high of roughly $55, a record it set back in November 2021 when the last major bull run was peaking. But numbers alone never tell the whole tale. In the past few weeks, Polkadot's community approved one of the biggest changes in its history, a formal supply cap of 2.1 billion DOT. For years, DOT was inflationary, with no hard ceiling. Now, for the first time, holders can point to a defined limit. It's a quiet but important shift. One traders compare to Bitcoin's hard cap, a narrative of scarcity that can help when markets turn risk on again. Analysts are already talking about a move toward the $5 zone if momentum starts to build. Beyond tokenomics, the network itself keeps evolving. Developers are rolling out what many call Polkadot 2.0, governance upgrades to reduce centralization, tweaks to parachain architecture, and improvements that make cross-chain connections faster and more flexible. These technical steps rarely make headlines, but they matter because Polkadot was built to be the chain of chains, a hub where many blockchains talk to each other. Each upgrade strengthens that original vision and gives DOT more real utility than a simple speculative token. Meanwhile, the big wallets, the whales, are stirring again. On-chain data shows accumulation patterns picking up, with large holders slowly adding to their bags while retail sentiment is still cautious. It's the classic crypto pattern. The crowd sells when the chart looks weak, and the patient money buys when prices are quiet. If history is any guide, those accumulations often appear months before price action turns. So, where could DOT go from here? Let's imagine a few possibilities. In the most bullish scenario, the broader market catches fire, macro pressure eases, and capital rotates into infrastructure tokens. That's when DOT could break through $5 and head towards $6 or even $7 by the end of the year. If ETF approvals for more altcoins arrive, or if a major institution announces a DOT-based product, the move could stretch into double digits over time, though that would need powerful tailwinds. In a moderate path, Polkadot grinds higher but more slowly, spending the next quarter between $4.50 and $6 as upgrades and the new supply cap gradually win believers. And of course, there's a colder path where macro trouble or regulatory shocks keep crypto subdued, and DOT ranges between 3.5 and 5, maybe even dipping back toward 3 if sellers press. October will give the first clues. If the recent wave of leveraged liquidations across crypto is truly the final shakeout, DOT could ride a relief rally alongside Bitcoin and Ethereum. A retest of $4.50 to $5 before the month is over would show that bulls are back in charge. If instead we see another risk-off stretch in global markets, expect sideways action until late in the year. Either way, the fundamentals, fixed supply, parachain upgrades, whale accumulation, are setting the stage for the next major move whenever sentiment flips. Remember, this is just how I see it, not financial advice. The market will write its own ending. What do you think? Are we about to watch Polkadot rise with the next leg of the bull run, or will it stay quiet a little longer? Drop your thoughts in the comments, and let's talk about where you believe DOT is headed in this cycle.